So today, we're diving into a crypto crash that was absolutely historic. And this isn't just a story about numbers on a screen, it's a story that's tangled up in some really high-stakes geopolitical drama.
Everything kicks off with this number, $19 billion. Just try to wrap your head around that. It's like the entire value of a major airline or the whole economy of a small country just gone. That's how much value was wiped out from the crypto market in one single brutal day.
And look, to put that in perspective, this wasn't just a down day. It was, hands down, the largest single-day liquidation event the crypto world has ever witnessed. We are talking about a financial shockwave that completely rewrote the record books.
And the speed of it all? It was just breathtaking. At the absolute peak of the panic, $5.5 billion vanished in 60 minutes. That's almost $100 million a minute, just evaporating into thin air.
So you have to ask, how did we get here? Well, the truly wild part is that right before this massive collapse, the mood was incredibly optimistic. Let's take a look at the predictions, and then the fallout.
I mean, check this out. Less than 2 weeks before it all went down, you had a major financial voice like Jim Cramer giving his audience a really simple message: buy crypto. That's about as bullish as it gets, right before the entire floor fell out.
And he was not alone. Right around that same time, Eric Trump was out there predicting that the fourth quarter for crypto was going to be, in his words, unbelievable. These high-profile endorsements were really setting the stage for what turned out to be an unbelievable collapse, just not in the way they meant.
Okay, so we've been using this word liquidation a lot, so let's just quickly break down what that actually is. In the simplest terms, traders often borrow money to make bigger bets. That's called using leverage. But when the market suddenly swings hard against them, the exchange steps in and forcibly sells their assets to cover the loan. They do it before the losses get any worse. That's the liquidation event that just vaporized all those billions.
Now, with that much money moving that fast, the actual infrastructure of the market was pushed to its absolute breaking point. So let's look at how the big exchanges, the ones right in the center of the storm, actually handled the crisis.
The sheer volume of everyone trying to sell at once was just too much. Big players like Binance and Coinbase started to buckle under the pressure. They were reporting system slowdowns, transaction failures, which meant that for a lot of traders, there was literally no escape. They were trapped, watching their positions plummet, unable to get out.
In the aftermath, you had Binance's CEO, Richard Tang, come out with a public apology. He said, "I'm truly sorry," and promised they'd learn from it. But for the thousands of people who lost everything, you have to wonder if an apology was really going to be enough.
To their credit, the exchange did follow up with some action. Binance's co-founder said users who could show losses because of the system issues could request compensation. And the company also stepped up and covered almost $300 million in user losses when some of its own tokens, which were supposed to be stable, broke their peg during all the chaos.
But here's the thing, a meltdown of this size doesn't just happen in a vacuum. To really understand the panic that fueled this fire, we have to zoom out. There was this really tense geopolitical drama playing out in the background between the world's two biggest economies, and it was creating a perfect storm of uncertainty.
You can just see the back and forth here. On one side, the U.S. was insisting tariffs were coming, but also saying the president was a reasonable negotiator. On the other, China was firing back, blaming the U.S. and saying they weren't afraid of a trade war. That kind of talk just creates massive instability in global markets. When big investors get spooked by something like a trade war, they run from risky assets, and at that moment, crypto was at the very top of that high-risk list.
And this quote just captures the mixed messaging perfectly. Even as his own administration was getting ready for new tariffs, President Trump was publicly telling everyone, "Don't worry about China, it will all be fine." It's exactly this kind of unpredictability from world leaders that just pours gasoline on market volatility. So, after the biggest crash in crypto history, fueled by all this geopolitical tension, what came next? Well, a period of really deep uncertainty, just full of conflicting signals about where the market was headed. On one hand, you had the industry's true believers coming out defiant. Paulo Arduino, the CEO of Tether, he just doubled down, declaring that assets like Bitcoin would outlast any traditional currency. And Michael Saylor, one of the biggest Bitcoin proponents out there, echoed that feeling with this simple, powerful message to his followers. It was a clear signal that he, for one, was still buying the dip. And then, amazingly, on the other side of all that chaos, a rebound actually started to happen. Bitcoin, after that massive drop, somehow clawed its way back and reclaimed the really important psychological level of $115,000.
Ethereum did the same, showing its own signs of a strong recovery as it fought its way back to $4,000. It all just added to this growing sense of market whiplash. But, and here's the crazy twist in this recovery, it created its own victims. $225 million in short positions got liquidated in just 2 hours. Now, short positions are basically bets that the price would keep going down. So it just goes to show you, even in a recovery, the volatility was still incredibly painful for a lot of people.
Which, believe it or not, brings us full circle. The very same guy who, just 2 weeks earlier, told everyone to buy, now looked at the rebound and declared, simply, we're back.
But that leaves us with this one big, nagging question. After a collapse and a recovery this violent, driven by forces way outside of normal market stuff, what does back even mean anymore? In a world of tweets and tariffs, can any recovery really be stable? That's something to think about.